On today's episode, we are going to take a look at two new growth stocks. The first one is one that's hitting the EV market, but not into consumer vehicles. This is actually doing high performance motorcycles and is seeing strong revenue growth. The second company we're going to take a look at is one that's changing the food game right now, and is one that is growing dramatic levels and has one of the highest margins for any other company in its market. Like always, my name is Jose Najarro, a self-taught investor who's been learning about the market for over 6 years. If this is your first time here, don't forget to hit the subscribe button, and everybody else, don't forget to hit the thumbs up. It helps so much with the YouTube algorithm. And finally, make sure to get that free stock. The link to Webull should be down below. For each stock, we're going to do the following. We're going to take a look at future growth. We're going to understand what they do. We're going to take a look at technicals, and I'm just going to give my overall thoughts on the company. Now let's get started. Energica Motor Company is an Italian manufacturer of electric motorcycles. We're going to have to see in a bit if one can buy it. It's not even traded over the counter here in the United States. But right now, the company is super micro small, man. How did you even find this company? Have you seen their vehicles out there? So it's a $32 million company. Obviously, you can see it's a if you see stock price move like this, it looks very uneasy. You can tell there's very low volume in this stock. This is a company with very low volume, so it's one that if you enter, you have to be careful with how you enter. Make sure you put a limit order of some sort. All right, so it does seem like I can trade it. It can be traded under over the counter as ticker EICAF, but there's almost no volume in it. There's definitely nothing on it. There's very low volume. To me, it's not looking like something I personally would invest in. But let's just still take a look at the company. It might be some of my, like you said, some of you guys might enjoy it. So Energica Motor, 38 million euros. Again, very small company. Future growth. The company is expected to grow dramatically, right? 78.6% on average. Right now, the company is not profitable, but it was almost about to be cash flow from operations positive. You can see after COVID situation happened, it started to decline. So COVID definitely seems to have kind of affected the company one way or another. But it is a strong future growth. Financially, the company seems to have a decent balance sheet. We know most automobile companies, they're going to have a lot of their assets as inventory, and this is what is happening, right? They have $5.5 million in inventory. They have about $1.1 million in cash and about $1.4 million in debt. Because they are in the automobile industry, we have to take a look at their balance sheet a bit different, right? Cash and short-term investments are usually not that strong in the automobile industry. They have to just have plenty of inventory. So their balance sheet seems okay. At the end of the day, I would personally have liked if they had better cash and short-term investment. If we take a look at ownership, pretty much is, like you mentioned, it's a spin-off of CRP Group, which builds parts of Formula One. And that's, I guess, the main reason CRP owns about 41% of this company. So they still wanted to keep a huge portion of that company, and we can see 41% is definitely a big deal. So fundamentally, some of the company looks pretty cool. Let's try to look at what they do more like it. So let's try. So they do seem to have some dealers here in California, which is, pretty impressive, right? They have dealers in California, in Texas, in Florida, in Philadelphia. So they're kind of entering the market. I want to see what kind of motorcycles they have. Like, how do they look like? So they have different types of motorcycles, right? Oh wow, this is actually so this is a performance electric bike. Where we were looking at more like Neo was more like a commuter electric bike. These are performance electric bikes. These are actually pretty cool. So this is the highest performing. They have the Energica Ego, which is the highest performing electrical motorcycle in the world for road, race, or in between. Acceleration 0 to 60 in 2.6 seconds. I don't personally ride bikes. I know my dad is big into bikes, and I'm pretty sure he would love a bike like this. So they provide the motorcycles for the Motor E World Championship. That's actually pretty cool. Let's see what other types of motorcycles they have. The world's only electric street fighter. So these are actually pretty cool. I mean, in general, they look like they're made really well. You can, just by looking at them, you can kind of see the quality behind them. So they also have retro style electric motorcycle. So they have all types of bikes, and these are actually pretty impressive, Usama. I definitely like the bikes that they have. So investors presentation, this is pretty recent, January 2021. So I wish, Usama, I wish this one would be a little bit more known in the United States, or just the stock price, the stock itself. The thing that's really deterring me is how low volume it has here in the United States market, even in the over-the-counter market, right? So this is pretty cool. Let's zoom in here real quick. So their 2019 sales were up about 47% compared to 2018. That's a strong revenue growth. The first half of 2020 order books is $3.7 million, and it equals to 165% of the total motorcycle sales in 2019. So just in the first half of 2020, they made almost double the amount of money the amount of sales that they did in 2019. This is definitely a crazy growth company right now. That's definitely insane. So assuming they make about 5 million euros this year, that gives them a price to sales ratio, I want to say, of what was their valuation? Of about 7, which doesn't seem too bad. So we can see they're in different markets. They're in like South Africa, I can tell, definitely in Italy, other parts of Europe, hitting some parts of the Asia Pacific region, and some parts of North South America, if that's easy to understand. So they're in South America, but in the north part of it. So for the outlook of the full year of 2020, they expect about 6 million euros in sale. That actually gives them more of a six price to sales ratio. So we can see they're hitting a lot of milestones. They increased 72% of dealers in the last 12 months, and over 70 dealers worldwide. They're in 4 continents in 29 countries. So this is actually pretty cool. Big data technology. In order to keep state-of-the-art innovation, our technical depth is working on big data technologies that will allow our Energica engineers to be updated on vehicle status. They're also trying to enter the marine life. That's actually pretty cool. Here they talk about their small size 2-wheeler mass production. It's also going to incorporate swappable batteries. This is something that's pretty cool. A lot of people are talking about swappable batteries, right? Just like in Neo, that was a big thing there. Here, Energica says that, yep, you can definitely swap your batteries. Pretty impressive. They're also looking at other applications which are under analysis. The helicopters, aircrafts with leading companies, second life battery charging systems for sharing scooters, vehicles to grid to appliances for emergency recovery plans. So Usama, this is actually a pretty cool company. One important person in this company is director Giancarlo. He is known from the past because he built up the Minari racing team, which was sold to Ferrari. So he has a lot of context, which would be important because Energica provides the motorcycles for the Motor E World Championship. I honestly would invest in this company, Usama, if it was in a better market here in the United States, if it wasn't over the counter and stuff like that. This is pretty cool, right? You can actually do voice communication with your vehicle if you're on Bluetooth, kind of talk to it, be like, what's your state of charge, or wherever you are. And these are also some other cool companies that might be interesting to look at. Cellular Line, Alscom. So most of their sales are coming from Europe, Middle East, Africa, the north part, and then Europe, Middle East, Africa, the south part actually makes up a smaller portion. United States is actually also making a nice portion. The overall number of dealers is increasing dramatically. They want to enter the Chinese market a little bit heavier, which is pretty good. 13 dealers in the United States, 50 dealers in Europe. They want to increase the Canadian dealerships. I don't think they have any in Canada right now, so that's another one. They're also in new agreements to sign with Hong Kong and Japan. So Sama, from a overall top point of view, the company looks pretty great. I don't think there's much more I can look at about it. They also take a look at their charging station networks. A joint venture between BMW, Ford, Mercedes, and Volkswagen with Audi and Porsche aims to build a network across the continent. This is actually, this one would be probably pretty cool. Ionity, increasing the number of charge stations across Europe. with over 60 fast charging stations only in Italy between 2019 and 2020. So, I mean, we saw strong revenue growth. We saw a decent balance sheet. We saw a market that will continue to grow. So, I just honestly, this looks pretty cool. They're growing in markets. They're entering new markets. They're entering new countries, and overall, they're expanding in the market that is booming right now. All right, so Rizviz, you're looking for GoodFood Market. So the GoodFood Market is ticker FOOD. If you're in the TSE, that's the Canadian market, I believe. I forget what TSE stands for. Toronto Stock Exchange. Is it TSE? Now I want to know. But if you want to trade over the counter, it's traded as GDDFF. Over the counter, this means you can trade it probably in one of my favorite brokers, Fidelity. Unfortunately, sometimes with these foreign companies, you might have to trade. You might have to pay some form of fee. For Fidelity, there's some of them that are foreign in Canada, and I have to pay $50. Those I normally stay away with. So definitely make sure if your broker is charging you a fee before buying any over the counter. Like I said, there's certain over the counters that charge me, certain ones that don't charge me. So normally the ones that charge me, I stay away from. So, actually, let's try a little bit understand. So, GoodFood Market is a Canadian online grocery, home meal, and meal kit company based in Montreal, Quebec. The GoodFood reached 200,000 subscribers as of 2019. That's a long time from now. And it's estimated 40 to 45% of the meal kits in the market. Toronto Stock Exchange under ticker FOOD. Rizviz, no, I cannot. I can't. I got to learn more about that then. You said, can't Americans buy TSE listed companies because of the free trade deal? Maybe we can. I know the Very Good Food stock. Is that one in TSE? The Very Good Food is one that I had to pay $50 for foreign fees if I wanted to buy that one. And that's what kind of kept me away from the Very Good Food. But GoodFood might be different. So Usama, it's like HelloFresh. You know, HelloFresh is a company I keep seeing that's very, very popular. And I do believe it's a market. I mean, honestly, once I make a lot more money, and I hope I make a lot more money in the future, I wouldn't mind having meal kits come to my house. Right now, obviously, I'm trying to accumulate this wealth. So I'll rather just cook for myself and save some money. But eventually, once I make it there, I'm going to have my at least meal kits, and then eventually a private chef, but one step at a time. All right, so let's take a look at future growth. So the company is expected to grow 23.2% on average. So this is a heavy growth stock. That's great. Like to see that. Right now, they are not profitable, but they are positive in cash flow from operations. So their balance sheet doesn't have to be perfect, but it has to be at least strong. Financially, they have about $104 million in cash and about $38 million in debt. So they have about 3 times more cash than debt. This is great news, in my opinion. It's a very strong balance sheet, especially since they have cash flow from operations. If they had cash flow from operations and positive earnings, this debt would have been even higher, and I wouldn't care. So it all depends on how their income statement looks for me to determine how their balance sheet looks. So we saw they at least had positive cash flow from operations. So Rizviz, the Very Good Food is in your small cap venture exchange. So maybe that's why I had to pay $50 for it. Maybe this one I won't have to do that if I decide to buy it. So thank you for sharing. Thank you for sharing that. And I've learned something new there. For example, I bought OTGLY, Red Cyber CD Project, right? That's over the counter in I forget what Europe country that's in. Poland. And no fees. So there's certain companies, I guess it depends on what market they're in. Like you mentioned, Rizviz, if they're in the Toronto Stock Exchange, there's probably no fees. But maybe if they are in the small venture exchange, then there are fees. So that's good news to understand. And thank you for teaching me something new. So now let's take a look at ownership. So right now, I love this. Insiders ownership own 29.9% of the business. They almost own 1/3 of the business. This has a market cap of 853 Canadian dollars. So Pretty good. The co-founder owns about 15%. The other co-founder owns another 15%. Yep, Rizvis, like Tencent. I can buy Tencent. They are over the counter and no fees. So again, the two CEOs and the two co-founders owned about 1/3 of the business. Very, very good. So fundamentally, the company looks pretty great in my opinion. So now I want to take a look at their company, at their website. So GoodFood website. So the only thing I hate about stuff like that, when they name their companies like such, I'm guessing this is it. When they name it so much as GoodFood. GoodFood is not an easy word to have a strong search engine optimization, so it's very hard to find the website. It took me 2 searches. But here, all right, so they create original recipes you choose. They deliver every week for free. You eat incredible meals every day. It seems like they have dinner, they have breakfast. It seems like they have all types. They have like chickpea curry, that looks good. The ground beef also looks good. Chickpea is just amazing in curry, in my opinion. So they also have pork chops. They have Turkish style with feta cheese. So they have a lot of cool things. They have breakfast as well on the menu. You can learn more about them. I mean, the food here looks pretty good. So you're saying it's very true, but somehow it's the leading meal kit in Toronto over HelloFresh and Chef's Plate. In comparison, HelloFresh is worth more than 10 billion euros. That's pretty impressive. I'm learning a lot. Thanks you guys for posting stuff like that. So overall, I don't think there's much more to see about their products. We can see what they do exactly. They have pricings. You can do it. I guess it all depends on what you get. You can either do a family pack, a prep pack. So let's take a look at their investors' presentations. Hopefully they have a nice presentation for us. So yes, they do. They do have a nice presentation. So this presentation was of January 2021. I haven't had dinner yet, and it's already 10 o'clock here. So this is actually making me pretty hungry. Everything here just looks good. So let's take a look. So Q1 of 2019, they had 126 active subscribers. In Q1 of 2021, they had 306 active subscribers. This is some crazy growth. Revenue is 394. We're seeing almost a correlation of active subscribers to users to revenue growth, strong revenue growth. Gross margins 32%. They're increasing adjusted earnings before all those expenses, EBITDA, whatever people call it nowadays, is increasing. So now they're at least making some form of money before all those expenses. They have plenty of cash at hands, and their market cap is still under 1 billion. They're increasing in their employees. So we can see overall growth everywhere, from active subscribers to revenue growth. They're improving their gross margins. They're improving their earnings percentage. They're improving their cash on hands. They're also, unfortunately, improving their market cap, increasing their monthly active users, website web visitors, and also increasing their overall employees. So they are a Canadian leader in online groceries. This in Canada's TAM is pretty high. So this is actually pretty cool, right? We can see, right? This right here is their subscribers, and it's gonna be pretty hard for me to explain this. But you can see as their subscribers seem to be growing, their revenue is growing at a faster trend, in my opinion. So like the trend of the revenue is growing a bit up. Is growing stronger than their subscribers. So what does that tell me? That tells me that some of their subscribers are doing either multiple products of theirs, or they're using it for other items as well. Maybe more families are also entering that market, because it's in theory, what you should see, if customers are increasing, they have similar gross margins, revenue should be increasing at those same levels. But that's not what's happening. Customers are increasing and their revenue is increasing at faster pace. That's actually pretty cool. So the more customers they get, the revenue is going to grow even stronger than that. And often, I'm probably through that risk is right. The overall online groceries that can also be pushing this, but that's again pretty cool. So they're launching GoodFood Wow, which is same day grocery deliveries. Currently in the GMA. I'm not sure what the GMA soon. They're also in Grand Theft Auto in GTA. I'm pretty sure these are Canadian regions or Canadian province of some sort. GMA and GTA. I'm not too familiar with that, and they are in major cities across the country within 12 months. So they're growing, right? They're definitely expanding their company. They're building bigger offerings with now nearly 550 products available, including highly successful holiday recipes. The only thing, one thing I want to say, thank you. The greater Montreal area and the greater Toronto area. Riskface is probably just like this dumb American. Thank you for sharing that. You're definitely teaching me a lot today, Riskface. I'm enjoying this. Pretty cool. So again, they're not only are they expanding in their current market, they're also expanding into other markets. One thing I do want to say though is sometimes you might have too many products. So now they say they have about 550 products. One thing I want to make sure is that this doesn't become a logistic mess, right? You don't want them to, once it becomes a logistic mess, it starts to affect margins. It starts to affect everything else. Maybe right now they're just trying all these products and trying to see which works best. But that's something I definitely would think about, right? The increase of all these products, is it going to start creating some form of logistic mess? Is it just going to be too much information for consumers? At the end of the day, I'm not going to lie. Me as a consumer, if I'd rather have 3 choices instead of 15 choices, because once I get a 15 choices, it starts just overloading, and I kind of like don't choose anything at all. And I'm pretty sure there's certain customers that are in that same boat. They kind of just want the top 3, and that's all they need. So their gross profit per subscribers is increasing. So now they're making more money from one subscriber every time. That's good. Private level schools. Let's see. They're also investing in automation leading to enhanced operations. So they're probably going to have drones around their facilities, moving around all this food, which is pretty good. They have leading gross margins, like you keep saying, right? Riskface, 32% levels. This is best in class in the overall Canadian grocery industry. And obviously things gets better, right? As you start to get more customers, they say lower unit cost in packaging as a result of scale. So as you start increasing the amount of deliveries, because you're getting all these products, you're actually getting them at a discount. So it ends up increasing margins even more. I searched for milk on Canada's largest grocery website and got 997 results. Yeah, I would just give up. I would never drink milk again. I would just stop with milk. So Riskface, I don't think there's too much more I can find about this or find out about this. Overall, I think the overview looks pretty good. What do we see, right? GoodFood, strong revenue growth. We also saw a very strong balance sheet. This is definitely a very strong balance sheet. They have positive cash flow from operations. They are profitable in earnings before all those expenses. The overall market that they're in, I do believe is a market that will continue to grow. A lot of people like to save time. The meal kits, time to me is one of the most important things. Once I have money, like I said, I would personally enjoy to have meal kits like this, where I save time cooking and stuff like that. So I can see the market growth. They're not only growing there, they're also growing subscribers. They're growing the amount of websites, the amount of monthly websites, the amount of products. They're expanding into different markets. We saw the online grocery. We're also seeing the one-day delivery. So overall, this is definitely a company of innovating and is kind of disrupting a lot of different markets. So overall, the company looks pretty good. Did we actually take a look at charts? The stock price overextended. It's not too overextended from its moving average. It's actually pulled back a nice amount, which is actually something I'm happy to see. We can see here some examples of being overextended, then it pulls back, but then hey, it overextends again. It's probably going to create another base here, and it pulls back around here. So overall, stock price doesn't look bad either. I really like this company, Riskface, and I honestly, I'm happy I looked at it now and not a week ago when it was a little bit higher, because now it looks even more attractive. So I hope that helped. How about you guys? Did you guys like the company? Let me know what you guys think.
I like to hear other people's thought. What were some of your red flags on it? What are some things you didn't like? And remember, these are just quick overviews. These are overviews we do in about 15 minutes. So there's still some other stuff we can look at, but at least now we understand the business. We kind of know their balance sheet. We kind of know their fundamentals, and we know what they're about.
I hope you guys enjoyed today's episode. This was part of a live stream that I did on Twitch where I pretty much just look at companies you guys want me to look. So make sure to follow me on Twitch. The link should also be down below. And if you want to learn more about becoming a better investor, make sure to check out my Patreon where I put weekly educational videos to help you become a better investor. You should also see all my other platforms down below. Discord is free to anybody that wants to join. I post every time I buy and sell there. So take care, guys. Have a good night and see you next time.